Hello, everybody. This is Piero Giorgio, author of Survive the Economic Collapse. Today, I have Peter Schiff with us. Hello, Peter.
Hi, how are you?
I'm very well. And Peter, first of all, thank you very much for all the work you're doing. I follow your show your podcast and your radio every day almost. And you've had incredibly accurate forecasts on the economy for the last years, and it's pretty amazing. And how do you see the world economy now that we are at the end of 2015 and for 2016 now?
Well, I still think there's a lot of problems in the global economy that stem from central bankers. I mean, obviously, some of them stem from politicians because many parts of the world suffer from an excess of government interference in an otherwise productive free market. So you have too much government regulation when it comes to business, particularly when it comes to the labor market, which leads to very high levels of unemployment in many, particularly European countries that have a lot of regulation in the labor market. But of course, taxes are too high in many countries. Governments' efforts to redistribute wealth and micromanage economies and centrally plan outcomes. This is a problem throughout the world. But fortunately, we do have more people operating in relatively freer environments. I mean, think about all the people in China, for example, who are operating today with far more economic freedom than they have in the past. Certainly, all the countries that used to be part of the Soviet Union and that bloc, I mean, there's a lot more economic freedom there. So on balance, we probably have more economic freedom today than we have in the past, even if some of the countries like the United States or Western Europe are less free than they used to be. Other countries are clearly more free, and so the global economy benefits from that. But the big problem is central bankers, and this is all around the world. Central bankers are printing way too much money. They've got interest rates too low. Everybody believes that inflation is a good thing, that inflation and currency debasement are necessary for economic growth, and this is undermining real economic growth all around the world and causing living standards to be lower than they otherwise would be in the absence of all this central bank manipulation. And I think the biggest problem is here in the United States. I think we've got the biggest bubble, and I think the world is grossly underestimating the level of problems in the United States. They're way too confident in our currency and in our Federal Reserve and our economy. And I think the next major crisis that nobody is prepared for is going to be a crisis in the U.S. dollar and in U.S. sovereign debt.
Wow, that's quite a picture for the. Obviously, no one knows. The stupid question is to ask when, but certainly what we seem to be seeing from even mainstream analysts is to see that there is going to be high volatility. And when you look at the commodity prices dropping, minus 25% on energy, minus 27% on precious metals, minus 14 on agricultural products. Where are the safe investments for people to invest now?
Well, first of all, remember, you're talking about commodity prices expressed in U.S. dollars.
Yeah.
But of course, not everybody is buying commodities in dollars, right? People in different countries have their own local currency, and you haven't seen that type of decline in most other currencies. In fact, in many currencies, commodity prices are rising. And so that is also part of the problem because the strong dollar makes things less affordable for other people. And so they experience a decline in their standard of living because they have a cost in their standard of living. America certainly benefits from lower commodity prices because we have an overvalued dollar. But I do believe that when the dollar reverses course, as the U.S. economy slips back into recession, the Fed has to abandon all this talk about raising rates and how great the economy is, and they have to stop patting themselves on the back for what a good job they've done, when the Fed has to acknowledge what should have been obvious all along, that the economy has not recovered and that they're going to prescribe, further stimulus. They're going to come back with more quantitative easing. You're going to see a big drop in the dollar, and then you're going to see commodity prices start to rise, particularly in U.S. dollars, where I think they're going to rise dramatically.
Yeah, well, and at the same time, earning per share is not growing so much. Debt, as you mentioned, is still skyrocketing in almost every country. and at the same time, poverty keeps increasing, as you said, and unemployment. Now, how do you see the impact of the elections in 2016 on the dollar and on the United States economy and financial market? And even, do you see any war scenario before or after elections?
I really don't think the election is going to weigh much on the outcome for the dollar. I think the dollar's fate has already been sealed, regardless of who's the captain of the ship when it goes down. There's a pretty good chance it's going to go down on the watch if whoever is elected. I mean, obviously, right now, Hillary Clinton is probably the favorite to win. And so, obviously, Hillary is not going to be friendly to the type of economics that we need. She's a big government person, a central banker. So she's not the type of person that we need in office. But even if we had a Republican, it's again the problems have already been created. And so there's really nothing that we could do. If we had, a better president and a Congress that understood these problems, it would make the resolution easier and maybe more successful. But the crisis is going to come no matter what. The question is, do we make it worse, or do we actually do something constructive for a change? And obviously, with Hillary Clinton in office, it makes the latter less likely. So, I would make my investments and protect myself now. Don't, think that the outcome is going to be different if somehow we get a change of party in the White House.
So what you're describing is similar, although you don't use the same terms as I do in my books. I call it the economic collapse. Do you see how deep do you think such a crisis or such a collapse, as I say, may impact people in the United States and the world?
Well, first of all, the U.S. economy is only able to exist in its present form so long as the world is foolish enough to finance it. Our whole economy in America is based on being able to use borrowed money to buy imported goods. We don't produce the things that we consume, and we don't save the money that we borrow. We count on the rest of the world to make our lives possible. And the world looks at Americans spending money, and they think we have this strong economy. And so since they think our economy is strong, they keep lending us more money to buy more imported goods. But all the while, they're subsidizing our weak economy and allowing it to get structurally weaker by lending us the money we don't have to buy the products that we can't make and can't afford. But in the interim, all of this is a net drag on the global economy because America has to be supported by the productivity and savings of the rest of the world. So we are a net drag on the economy. Whether people understand that or not, people point to America, hey, we're the big consumers, we're buying everything. Yeah, but we're not paying for anything. I mean, you don't need a deadbeat customer. Vendor financing your customer is not a good idea. You need customers that can actually afford to buy the products that you're selling them. Don't just pretend that you're selling by selling on credit to a customer who can never pay you. So the world collectively has to suffer to prop up America. But I do think when that stops and the dollar collapses and Americans can no longer command such a large share of the world's output or the world's savings, I think everybody else or the countries that have been bearing the brunt of that burden, particularly in emerging markets in Southeast Asia, countries that have had significant trade surplus with the United States, countries whose central banks are warehousing mountains of U.S. dollars and U.S. treasuries, these are the countries that have the most to gain from the end of this because they're going to reclaim their purchasing power. Their citizens are now going to get to reap the rewards of their hard work, of their frugality, their savings, or their investment. You're going to see standards of living rise in other countries as they fall in the United States, as prices spiral out of control in America so that Americans can't afford to buy what they used to take for granted. All of a sudden, prices will fall in other parts of the world, and now goods that were unaffordable will suddenly become affordable, and you're going to see a real burgeoning middle class in other parts of the world. And this is all going to be a net positive for the global economy. For America, hopefully it will be a wake-up call and force us to make the type of reforms that thus far, politically, we haven't had to make because the world has been bailing us out and giving our politicians a reason not to do anything.
How do you see Europe playing in this, the European Union and European central banks?
Well, I do think that the European Central Bank is going to be dealing with an inflation problem of their own creation. I mean, right now you have Mario Draghi bemoaning the fact that inflation is too low in the Eurozone, and he wants to nudge it back up closer to 2%. Well, I think the fact that inflation is closer to zero, or it's somewhere between 0 and 1% right now, the way it's being measured, that's a positive for the Eurozone. I mean, there are other problems that Europe should be worrying about. A lack of inflation is not one of them. There are serious problems being created by government that should be dealt with, and not by the central banks, but by governments. But all the ECB can do is create inflation, and somehow they think that higher inflation is going to solve all the other problems. Meantime, the absence of inflation is what's making the other problems less burdensome. But I do think the ECB is going to succeed. Inflation is going to be much higher than they're hoping for. And I think what's going to surprise everybody is going to be the extent to which the ECB is going to be forced to raise interest rates to rein in the inflation genie that they let out of the bottle. Because once inflation is 2.5%, 3%, it's going to be a different monetary ballgame over there. And maybe that will finally force European governments to make some structural reforms when they have to deal with a tight monetary policy to restrain inflation. And it's going to be that rising cost of living, which is going to compound the other problems, the other real problems in Europe that should be the focus of attention, not the fact that consumer prices are not rising fast enough.
So in one way, it's refreshing to hear someone who's actually optimist. Usually, I interview people who are much more pessimistic than that, but that's quite an interesting view. So, for normal people, I'm not talking people which are hugely wealthy, but for normal people who have maybe 10 or 100,000 put aside and used to think the stock market, for example, or bonds be a good investment. What can they do today to protect themselves?
Well, I think people need to be invested more so than at any point in history, because you just can't have money in a bank because interest rates are much too low everywhere. Central banks around the world are committed to destroying the value of money. They're saying that that's a good thing. Central bankers are now saying that stable prices, that stable purchasing power is bad. It's a threat to economic growth. They don't want price stability anymore. They want prices to rise every year, which means they want money to lose value every year, which means you just can't hold on to it. You've got to do something with it to preserve the purchasing power, and that's where you've got to look at actual investments. You've got to look at common stocks. You got to look at precious metals, particularly gold, other assets that will protect you from this inflation. But not all stocks are the same. I mean, you have to be more particular about what companies you buy. What is the value? What is the PE? What is the dividend yield? Where do they trade? What country are they domiciled in? Where are their earnings generated? What currency do they pay their dividends in? There are a lot of important questions that you need to ask before you just buy stocks. But you can't just be in paper. You can't be in a bank account, and you can't be in a bond, whether it's a government bond or a corporate bond. The yields are too low to compensate you for the purchasing power that you're losing and the risk of significant additional losses if inflation ultimately spirals out of control. So you really have to own hard assets, real companies, gold and silver. And those are some of the investments that I'm helping our clients make, or our customers at Euro Pacific Bank. I opened up my company offshore to cater to the investment needs of my international clientele when U.S. regulations made it very burdensome for me in the United States to handle European or Asian or South American customers. I now do that through my offshore bank, and because I'm operating outside of the jurisdiction of the U.S. securities regulators, I can offer a better array of financial products at much lower costs than what I can offer in the United States, where the burden of regulation runs up the costs and limits what I can do. For example, one of the things that we do at my bank is I was the first person to ever offer gold and silver backed debit cards, where my customers can store precious metals with my bank and get a MasterCard, which they can use like any other credit card. They can go to any merchant that accepts it, or they can go to an ATM machine and they can use it. But what they do is they're spending their gold. Now, of course, they could also spend their euros or their pounds or their dollars if they prefer to spend those. And that's what most of my clients do that own gold. They don't want to spend their gold yet. They'd rather spend their fiat, but they know that they can spend their gold if they ever need it, because they can access it with their debit card just as easily as they can access any other currency that they have on deposit with my bank.
So indeed, so people can learn more about this at europacificbank.com. I see the link.
Yeah.
I'll put it in the description. And certainly, you mentioned gold and silver, where they've dropped quite a bit at least on the trading on the markets, and yet a lot of people keep on their physical gold and silver. Where do you see that moving in the next few months?
Well, a few months it's always difficult, but I mean, my guess is that we'll move higher because we're on a 6-year low today on the price of gold. Everybody is waiting for the Fed's decision on interest rates, which is coming in a couple of weeks. And, I think whether, the Fed raises interest rates by 25 basis points or leaves them at zero and continues to talk about raising them another day, I kind of think regardless of what the Fed does, I think gold is going to rally, because I think gold is already sold off anticipating this rate hike for years. And there is an old, Wall Street trading expression, buy the rumor, sell the fact. Well, the rumor of a rate hike has been around for years, and so this fact is a long time in the waiting. Everybody has been positioned for it, and so I think once we finally get the news, traders will sell on it. And by the way, I think that gold has discounted many more rate hikes than we're likely to see. And so I think either way, it's going to be a decline. And of course, a rise in gold. And of course, if the Fed doesn't raise rates and everybody is so convinced that they are going to, then maybe people will finally get the message and we'll have a big rise in the price of gold based on the failure of the Fed to raise rates.
One last question is, depending on what people put into precious metals, what do you consider the good ratio between gold and silver?
Well, historically the ratio is more like 15 to 1 or 20 to 1 or something like that. And right now it's more like 60 in that neighborhood. So clearly, if you look at historic relationships between gold and silver, silver is very inexpensive. And so I think in the next bull market, you're going to see silver close that gap with gold. Whether it gets all the way up to a 15 to 1, I don't know about that, but it can certainly get to 25, 30 to 1. That should be pretty easy. So that would mean that there's significantly more upside in silver than there is in gold.
Excellent. Well, for sure, people can learn more about you online. Is there? What's the address of your blog, your financial blog?
Well, I have a lot of information on the internet. Schiffradio.com, my last name, SCHIFF radio.com. That's the home to my podcasts. I'll be recording another one today. I do those, once or twice a week. My video blogs, you can see on my YouTube channel, The Schiff Report. Just SCHIFF Report on YouTube. You can subscribe there. I also post my podcast there. So either at Schiff Radio or Schiff Report on YouTube. And, I write a lot of things on my website at Europac.com is my website for my U.S. broker-dealer. I do post a lot of my articles that I write there. They're also on my Facebook page. Anybody that just, follows me in social media, gets onto my internet, my websites, there's so much information I put out. And of course at Schiff Books, you can look at all the books that I've written. And if you haven't read, my most recent book is called The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country.
It's a very good book. I encourage my readers to read it. I will send you a copy of my book to you.
Thank you.
And of course, should you come to Europe anytime, let me know in advance. We have I have a lot of friends here in Geneva who are bankers and who are skeptics and who don't believe that we're going to a crash. And it would be very nice to come and educate them into a public conference. I'll be happy to organize that for you.
Thank you.
I thank you very much for your time. And we hope that the crash will not impact us too much. But what's inevitable is inevitable. Thank you very much.
Sure thing.